Hello guys, today I'm going to be teaching you about turtle soup and the breakaway gaps, okay? How to build a model using turtle soup and the breakaway gaps. So here I'm going to be showing you a nice setup that just formed on Bitcoin, and I'm on the daily chart. So Bitcoin, you can see that it was trading within this range here. So we move to the premium of this range. You can see the equilibrium of this range is right there. And we failed to displace above the high, so we generated buy side liquidity instead. Okay, so you got buy side liquidity right here, and then we moved away, displacing lower. Okay, so maybe one would say I see a fair value gap right there after failing to displace above here. But you look at this candle, totally disrespected the fair value gap, right? Because you want to study price action inside that fair value gap on a smaller time frame. Like since we're on daily, 1 hour will be idle for that. So let's go to 1 hour and see, just to show you that these actually didn't materialize. Okay, fine. You see that on 1 hour you have this fair value gap here, so you refine that, and I want to see if we closed above the midpoint of this fair value gap, which is the CE. You see that it displaced above the CE of this fair value gap, completely disrespecting it. So you don't take that trade, you stay out. You go back to your initial time frame, and then you wait for more confirmation. Okay, so you wait for price, and then it generated buy side liquidity right there. It went on to purge buy side liquidity. So this is a turtle soup, because you look at this candle that actually took buy side here, it failed to displace above buy side liquidity. So now liquidity has been engaged on this side, and we have liquidity on this side as well. So you want to see how price moves after purging liquidity, and you can see here that it displaced to the downside. On 1 hour, you can see clearly the breakaway gaps when it was displacing to the downside. You have sell side liquidity resting here. You also have sell side liquidity resting above these lows here. And these relative equal lows, if you look at the bodies here, this is where the majority of the volume is in the market. Okay, they are too smooth. We got smooth edges right here, and if you look down here, we just came all the way down to purge that liquidity resting there. So let's go to 1 hour, because we've now you can now see the total soup, the buy side that's taken, and how this candle failed to close above. And then you got this candle, a down close candle that closed below the open of this candle on day that took buy side here, this one. So you go to 1 hour. I'm gonna go to 1 hour, and I want to study sorry, we're gonna use 4 hour. 4 hour as the breakaway gaps here. So I'm just gonna sync this in layout so that you can see it. So this is the turtle soup on 4 hour, and then this down close candle here that displayed close below the open of the candle that took this one, right? Took buy side liquidity right there. This is on 4 hour. You got the breakaway gap. So what is a breakaway gap? Let's just go to 4 hour. Let's see here. So here you can clearly see the turtle soup, and then a bearish market structure shift right there with two fair value gaps. So if you have two fair value gaps, that creates a break in market structure, which is a market structure shift here. Sorry, you can either take this one as your market structure shift or this low. They are equally the same. So let's say we take this one here. You look at this candle. It closed below the swing low here. So this qualifies to be our break in market structure shift, right? So okay, let's do this bottom left, and I like to use a black color, of course. And then you got two fair value gaps here, this one and this one, that actually form the bearish market structure shift. So in a case like this one becomes our breakaway gap. We don't expect price to go all the way up. Okay, so this becomes our breakaway gap. you don't expect price to go and close above the midpoint of this one. So if you are a guy that likes to swing, as soon as we trade back inside the CE of this one, you go short right there, you put your stop loss just above the midpoint of this one, because if it retraces, we don't expect it to reach the CE of this fair value gap. Okay, and then you can target the sell side liquidity that's resting here and here. But I want to show you something that's that confirms this. As you I mean an entry on a smaller time frame, a confirmation entry on a smaller time frame. So you can, because you're on a 4 hour, and I don't like to place my trades on this time frame. I like to move to a smaller time frame, like 1 hour or 15 minutes. If I'm trading crypto, I'm quite comfortable with 15 minutes. I don't really like to use 5, 3, and unless I'm trading forex. Okay, so let's say we move to like 15 minutes. We want to see how this fair value gap here, this 4 hour PC, we want to get a confirmation like the model on 15 minutes, and you can see how it was respecting the 4 hours. Let's just write this down. This is a 4 hour CB. So this is the CE, the dotted line, right? So you see it went all the way up and then came down, went up again, taking buy side liquidity here. So this is now buy side liquidity taken. So we're waiting for a model. Now we want to see a break below the low that took out buy side liquidity, because this one failed. So it traded to the like close to the to a rejection block basically, right? So since it didn't trade above this one, we don't want to, we are not going to focus on this low here. We focus on the low of the high that took out buy side or sell side in the case. So here is our bearish market structure shift. So we want to see the fair value gap that was formed in displacement. Okay, so if you look at the fair value gap is right there. The fair value gap is right there. What other confirmation do you have? It's the low of the 4 hour CV, right? What other confirmation? You also have a bearish order block right here. The last down close, the last up close candle before this displacement lower before the bearish market structure shift. So this is a high probability setup. You have like 3 PDRAs confluencing right there at your entry. You have this bearish order block. Um, this is pulled. Bearish order block, the fair value gap in displacement, creating a bearish market structure shift, and the low of this 4 hour BC. So here's a clean setup and the fair value gap, of course. So if you take this and then you put your stop loss, you can put it, because you also have a fair value gap here, and this is crypto. You don't want to be having like a tight stop loss. You can just put it above, or you know above this high, and then you target your sell side. This is a low hanging fruit right here. You have your low hanging fruit. You have a low hanging fruit right here. You can target that, and it's an easy 2.5 R, 2.5 R, and that's a good ratio. And then if you want, you can just use your Fibonacci extensions to actually get like let's just do this here. I don't like to have like a -1, -1.5. If price is overzealous, you can just leave it around, but I like to target -1 standard deviation, so it becomes a 4R in that case, which is a good ratio. If you're risking 1,000, you risk 1,000 to make 4,000, and you can maybe take like 80% off here at the low hanging fruit, and then you can also scale out on these standard deviations. Majority, I mean a full pull on -1.5 standard deviation. So this is how you build a model using turtle soup and breakaway gaps. Okay, I like to like get a confirmation on a smaller time frame of this uh and then a bearish market structure shift, a retracement back inside this range, and then you know the model class. So this is the model that I most likely that I use, and then I find like a fair value gap in displacement somewhere here. So you have buy side liquidity here on a smaller time frame, like inside a hard time frame PDRA, right? Inside a hard time frame PDRA, like for example, something like this, maybe a hard time frame fair value gap. This is what I want to see inside a hard time frame fair value gap. Let me just remove this. Let's say this is my hard time frame fair value gap here. I want to see something like this. And that's exactly what happened here. And this was a fair value gap below a breakaway gap. So you have a breakaway gap here. You have a breakaway gap. Sorry about this. And then inside the fair value gap here, you want to see something like this. And then this is when you take an entry, right? This is a let's see. So how do you confirm? Because sometimes you are going to see two fair value gaps, but you see it trading back to the one that's up there, not this one, the one that's supposed to be a breakaway gap. So I think this is the hack, right? So I'm gonna give you a hack. Let me go back to 4 hour where you can see clearly the breakaway gaps. So let's just remove this. Um, okay, so this is the hack that I use, guys. So the hack is this. Below the swing low that we are breaking, you want to see, we don't want to see like this candle should the second one, okay, the one that forms the second fair value gap should be the one that breaks the swing low, because if it doesn't break and maybe the third one breaks it, then you can't qualify this as a breakaway gap. We are most likely to go on a reverse back inside that one, then drop. So you want to see two fair value gaps displacing below swing lows, okay? Displacing below swing low here. This one started the displacement, this one finished it. So we don't want to, because this is institutional sponsorship, right? We are not gonna go back all the way up there to give the guys that wanna go short a chance, because those orders the smart money, that's institutional sponsorship. Like, I don't know how to put this, simply put it, but basically it's the institutional sponsorship is strongly bearish. This is a signal in the market that we are bearish, and it's stretching price, pulling it lower, and these are the signatures it leaves on the chart or in price that you can use if you are smart money. You know that those guys are not gonna we are not going to this is a breakaway gap. Basically the algorithm is showing its hand here to say, hey, I'm like strongly bearish, so I'm gonna leave a breakaway gap here, and you want to study this fair value gap on a small time frame, and then you can look for a model right there. You can target sell side here, sell side there, sell side there, sell side there, and then sell side obviously there. And you can see that we actually made it to that one, and this one was actually um, in close proximity to that standard deviation, so it's more likely to reach this one as well, because it confluences with the standard deviation, and as you can see, it went all the way down. So if you go to 15 minutes and you actually look for a percentage, look for a fair value. Where's the fair value gap? The fair value gap is right there. Boom. You put your stop loss. Let's say you put your stop loss here. You trust that it's not gonna go higher than this one. Okay, I just did some things. You enter here, stop loss somewhere here. Okay, target this. It becomes a 7R. Beautiful ratio. And then boom. That's how you do it. You can do this going to the upside as well. It's the same thing. Turtle soup, breakaway gaps, because you are most like there are higher chances of one getting like a breakaway gap update turtle soup. I'm teaching you a model that I mostly use. I use this on Forex. I use this on crypto. I use this, like, everywhere. It's all like it's just a signature in price that I've seen repeat so many times. So this is one of the models that I use when I'm trading crypto. Crypto has a lot of breakaway gaps because it's volatile like that. Another thing, I use this on like a 15-minute chart on like NASDAQ. I apply the same thing. For example, okay, I'm not going to talk about NASDAQ. Let me just end the video here before I confuse a lot of you guys. I hope this video was insightful. And yeah, cheers. That's it for the day. Turtle soup and breakaway gaps. But obviously, you want to have a clue of, are you a premium or discount, because you want to sell it premium, right? And you check here, we sold a premium of this range here, right? Let's look at this. Let's look at that. Boom. So if you want to look at 15 minutes, you look at the most recent range on 15 minutes, because you want to go short right there. Swing low, swing high is there. You're going short at premium of that. Boom. So it's easy, guys. Come on, like turtle soup and breakaway gaps. You write it down, you look for it, you practice it. I'm going to show you another example, maybe using Forex, and how I use this the same model on like GU, EU, and the likes. Okay. I hope this video was insightful. And maybe uh, let's look at Ethereum, because it actually moves the same as Bitcoin. You can see the turtle soup there. Is daily, but the turtle soup for Ethereum was like not that convincing, because you see that candle actually closed above the highs. So let's just look at this turtle soup. Sorry, that's a true session open. Turtle soup is this one. Yes. Let's look at 4 hour and see if we had breakaway gaps there. Or we did have it, and the same thing happened basically, but it failed to reach the CE. So we do the same thing. Let's highlight this favorite gap. Go to a smaller time frame. We want to study 15 minutes or 1 hour. Okay, so we're gonna see when it breaks. It was not that clean on you see the favorite gap, because yes, we went all the way up. Um, we took buy side right there. We went all the way up. And this is the low of the high that took out buy side. So you want to extend this out. You want to see displacement here. There was no displacement really. And you even here the fair value gaps are not so clear, so it was not, it didn't look like, it was not beautiful like how it was on Bitcoin. Let's check 1 hour quickly. Maybe 1 hour has a much more clear picture. Well, even on 1 hour it was not. So yeah, Bitcoin was the one, but the idea is still the same, breakaway gaps, uh, yeah. Yeah, because this one is like a high risk if you're still new, but this is also beautiful on uh, on the Ethereum. Okay, this was not bad at all. This was beautiful, by the way. But since you're on 4 hour, you wanna go to like 15 minutes, and you wanna look for a model inside that. Okay, so you wanna see the highs taken, then a break in matter structure, but this one is not proper. I like this one. So you study this one, then yeah, there is a favorite gap right there. There is a favorite gap here in displacement. See that? Boom. That was like, it was nice. It was nice. This displacement was like everything. Then we consolidated here, manipulation, then distribution started. This was beautiful. And then it went all the way down. This was nice, but I'm not talking about this model today. Okay. Cheers, guys. So turtle soup and breakaway gaps. Okay. Turtle soup and breakaway gaps. That's a model.